The following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to have Kyle Cooper from Cypress Energy on in just a few minutes here to talk to us about the natural gas contract because we had such a big move here over these last few weeks. He's the first person in the business that I've met that specializes in natural gas, and we get him through our good friend Rich Anderson. So we'll have Kyle on here in just a few minutes. I've posted into Tiger TV the natural gas over the last couple of days trading, and as you can see, it follows the numbers of the Fibonacci sequence that we look at. You can see that the lows were 1.618 expansions, and so far our rallies have been held by retracements of either 618 or 786. However, if we get natural gas much above the 230 level, it's got a chance here for a pretty good reversal. That's a question of whether it does that, because we came very off the bottom very strongly early this morning. We'll see what happens, but Kyle will be with us pretty soon, and then we will chat with him about what he does. He's down in the Houston area, so we should have some good times. Now, the thing that I posted in to start the show was the gold, folks. If you recall, we've been watching this very closely. We realized that 1153 level held for about $8 to $11 was all, and then we've been going down, and now we're right at the 61% retracement within $2. We've got Kyle Cooper on the line from Cypress Energy. Kyle, are you there?
How are you, sir?
I'm very good. You can delete the sir part, but thanks anyway. Now you're down in Houston, correct?
Yes, indeed.
Okay, the first question we have from one of our listeners is, how did you get involved with specializing in energy, and particularly natural gas?
Houston in particular is kind of the energy capital of the world, especially from the physical side. My father was actually on the kind of production manufacturing side of it for many years, and coming out of college, I actually got a job starting as a trading assistant for a gentleman who really was one of the godfathers of financial trading for oil and natural gas. So just kind of been in the blood and been in the family, and what was the opportunity that I found. What
was his name, Kyle?
Tony Annunziato. He's
sure.
a gentleman who'd worked for Lehman Brothers and Smith Barney for many, many years, and was really one of the, like I said, really kind of one of the godfathers of fundamental analysis and really looking at how supply-demand factors impacted price and relationships throughout the energy complex.
Wow. So do you specialize in supply-demand of natural gas? Do you do technical analysis also, or what is the specialty?
Certainly, we look at technical analysis because you just can't ignore that. Certainly, in the last 5 to 10 years, there's more and more money been deployed by algorithmic and technical systems. So while you can have a fundamental view, if you don't have at least an eye on what the technicals are doing, you can really get run over waiting for your fundamental outlook to come to fruition.
Oh, that makes good sense. Now, I've posted into our Tiger TV network here the U.S. working gas storage that you sent me, the chart on that. Do you want to explain to the folks what we're looking at here?
Absolutely. There's two things to note about natural gas storage. Consider a storage facility in a natural gas storage facility much like a sponge. When the sponge is dry, even if you put a little water in it, not much comes back out. So you have to fill up, you kind of have to put in some amount of natural gas into each storage facility before you can actually make natural gas come in and out of the storage facility easy. That initial gas is called base gas. There's about 4,300 BCF of base gas in the country. The working gas is that gas that can come in and out easily and what we use to meet our demand in the winter, and that hole then is where we put gas back in throughout the injection season to prepare for the next coming winter. So this is working gas storage as reported by the EIA, the Energy Information Administration, the statistical arm of the DOE, and it's reported every week. And this is their best estimate of how much gas can actually be pulled out and delivered through to consumers. And as you see, that's reported actually each week on Thursday at 10:30 Eastern. And it's really an influential factor in the market because it truly does give a real indication of how supplies are sitting throughout the natural gas industry.
I see. Now, we had expiration in the November contract yesterday, I believe. Is that correct?
It was Wednesday, actually.
Wednesday, okay, because it was under a great deal of pressure, yes.
Yes, and so yesterday, December became the prompt contract. Here again, for your listeners who might not be real familiar with all the futures contracts, they at least in natural gas, they expire each month. So if you look at a spot price, that being the first, the prompt contract, you'll actually see a big jump from Wednesday to Thursday. That's because the November contract rolled off relatively low. The December contract for December delivery has a much higher price as demand is expected to be much higher in December. So if you look at a spot chart, you see a big gap. In reality, December was actually down slightly on Thursday, not up like some of the charts might suggest.
Oh, I see. Now, this is a real strong seasonal factor with winter coming up. The natural gas would be used more during this time than during December, January, and February, I suppose, and other months.
Yes, absolutely. December, January, and February are by far your highest demand months, and clearly that's hugely influenced by weather. One of the things to note is I'm sure a lot of your listeners have seen and heard across the news stories how robust U.S. natural gas production has been, and that's very, very true. The last few weeks, the collapse in the price has really been predicated on on weather. Weather has been well above normal, and while that does not yet create, that simply lowers it lowers demand as temperatures remain above normal in October and early November, because the heaters aren't kicking on yet, but the ACs have kicked off. And so that has allowed injections until the last week or so to a much above average pace in late September and October. And that's really kind of what led to this last price collapse. Also, more importantly, is the current 15-day weather forecast, which now extend into early to mid-November. Look for a continued above normal regime across most of the country, keeping winter demand kind of abated and pushed off, and actually most likely allowing injections to occur into early to even mid-November.
Well, this next question comes from me, and I'm sort of embarrassed. I've only traded natural gas probably half a dozen times in all the years I've been trading, and that's 50 years. But 2 years ago, February, it had a $10,000 move in one day. I remember. That was so vivid. I happened to be in that, not knowing that it was expiration, and of course I was alerted, say you're into an expiring contract. So I ended up, I think I was up about 12 to 15. It was around $1,500, and I said, well, I better get out of this. And I continued to watch it drop $8,500 the rest of the day. But the question that I have is, and this is really basic, where does natural gas come from? Are these wells like oil, or is this a byproduct of oil drilling and stuff? Where does it come from?
Two things. Historically, the gas came from dedicated natural gas wells. There's always been what's called associated gas, and that's what you were referring to in terms of the oil. Typically, when oil comes out of the ground, a certain amount of natural gas comes with it. That's historically been relatively small. However, in recent years, with the proliferation of the oil production due primarily to the shale technologies being transferred from the gas reservoirs to the oil reservoirs, associated gas actually makes up a much larger percentage of the natural gas overall supply than it did in previous years. And so, to answer your question, it's actually both, Larry. It comes from dedicated natural gas wells, primarily in Louisiana, in Pennsylvania. Those are largely natural gas wells. In Pennsylvania, there's also a term called wet gas, which means you have natural gas is methane, just CH4 if I get a little too technical, but then you have ethane, propane, butane, and some others. Those are, ethane still remains a gas very easily. Propane does too, but the propane will obviously liquefy, as that's what most stovetops what most barbecue grills use. And that wet gas, and as you go up the hydrocarbon chain, they typically increase in value. So what has been happening is in the areas that had ethane and propane, until the oil collapse this last year, they really didn't have to drill for the natural gas. They were drilling for those liquids. Now with the drop in crude prices and the subsequent collapse in propane and ethane, those liquids no longer earning a whole lot of money. In fact, we just saw one report, I think it was yesterday, that the liquids business of this particular company actually had lost money because after you pay the processing fees and transportation, they weren't getting enough to recover their overall costs. So in a rather long-winded way, sorry about that, but it actually comes from many, many wells all the way across the country, and the shale technologies really have been revolutionary in creating ways for the companies to bring those molecules up to the ground into market.
Is the U.S. the major supplier of natural gas, or is this? It has to be worldwide, I would imagine.
It is worldwide. I think right now we're right on par with Russia, and I believe we've actually surpassed Russia here in the last few months. It's hard to get relevant data out of Russia, but we are certainly one of the top producers, and we're one of the top producers of oil now, too. Russia and Saudi Arabia are both slightly over 10 million barrels. Here again, depending on how you classify some of those mid-range hydrocarbons, the U.S. is the number one oil producer. So it's really been, just a huge shift here in the last 5 years to decades to what the shale technology has really done for the U.S. energy outlook.
Wow, this is very interesting. Now, your firm, Cypress Energy, did they do flat-out speculation or hedging or both, or what is their?
I actually have a number of different companies that I'm involved with. Cypress Energy is a natural gas only trading fund. We actually only use financial instruments. We don't involve ourselves with any of the physical because when you go into the physical side of the business, you have a lot of regulatory and other issues, and it just takes a lot more manpower. When you stay only on the financial side, you evade a lot of that, or you don't have to be as concerned about that, and you can do it with a much smaller staff. Cypress just has 3 people.
So you're basically looking at futures and options then, and different strategies within that.
Absolutely, that's exactly right. So that's the outlook from there, and so. And by doing that, there's also certain tax advantages. For those who trade exchange-cleared financial futures only, there's actually a 60-40 tax split. So, clearly I'm not giving tax advice, but there is an advantage that regardless of how long you hold a futures contract, profits are taxed 60% long-term rate, 40% short-term rate, regardless of how long you hold that futures contract. And that's one of those idiosyncrasies of the tax code that everybody's talking about.
Well, listen, Kyle, thank you for being on with us. And if it's okay, we'd like to call you maybe in a month, and we'll go over some other things that we might be looking at. And anything you'd like to bring to us, give me a call, and we'll have you on the show right away. This was incredibly interesting. Thank you for being with us.
Absolutely. We can do this on a regular basis.
That would be great.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, let's get back to the gold and silver. I'll do the stock market stuff here in just a little bit, but we'll see what happens. Now, the gold is within about $1. We're looking at around at 1139. So far, we've been to 1140. The other thing, we've got a caller, our good friend from Clearwater. David, are you there?
Yes, sir. How you doing this morning, Larry?
I am good, my friend. What can I do for you?
I wanted to follow up on the guest that you had on a minute ago with natural gas. As you know, I traded quite a bit. That guy was awesome, by the way.
He was really good. He's a good friend of Rich Anderson, and Rich said I should make contact with him. And they really do a great deal of business. They're quite successful, and Rich does a lot of business with the fellow too. So as you can see, I knew more about natural gas after 15 minutes with him than 50 years of listening to it. So what can I do for you, David?
He kind of confirmed what I had to teach myself, all over the internet and just getting on the EIA's website and the whole nine there. And I was like, wow, cool. Kind of having been self-taught, you never really know if you're learning the truth or not. You know what I'm saying?
Yeah.
You're like, well, I think this is right, but I'm not sure.
Yeah. Well, I was familiar with Tony Annunziato, but I wasn't familiar with Kyle. So anyway, go ahead, my friend. Fire away.
From a technical standpoint, this natural gas is, because of the fundamentals that are driving natural gas. I said a minute ago to kind of cut to the chase. It's redefining the term oversold. It looks to me that, and forgive me because I don't have a chart in front of me at this precise moment, but it looks to me from a technical standpoint, we got kind of a 3-drive to a bottom kind of setting up, but it also looks
Yes.
like there's a couple of different ABCD patterns that wants to take it down to about 214.
Well, we hit
well,
217 early this morning, and now we've rallied 10 cents. So I'm not sure whether that's the bottom, but that was a perfect 1.618 retracement of yesterday's range. It was also that ABCD pattern that you talked about, also completed there. So my guess is that if we can get this above the 228 level, we've got a chance here for some type of reversal. But my goodness, this thing has been in a free fall. It's just been going down. Well, you know what it's been doing. It's been gapping down every day.
Yeah, exactly. And it's been nice because I've been selling it, but and I've tried to go long a couple of times. I've been stopped out about 3 times.
But it's a good trading vehicle, David. I mean, it follows.
It is.
Good trading patterns. The fills are good, and it's very, very, very heavy volume. And as you can hear from what Kyle was talking about, they do all of their business through the futures and options market. So you can imagine how many people are doing that, all over the world. So it is a good. I haven't traded it much because I've watched crude oil so much, and of course they're different products. But I'm going to start looking at it more and more for sure.
Just keep in mind, though, that when you're doing that, 10:30 on Thursday is when the EIA releases.
Oh, yeah.
And
I heard that loud and clear.
Oh, brother, trust me, man. I've traded natural gas a lot, and, you have to take that into consideration because, to put it like in S&P terms, the natural gas can go up 1% and down, too. It'd be like the S&P going up 20 and dropping 60 in 10 minutes.
That could never happen. I can understand it going up 20, but the S&P is never going to drop 60.
Exactly.
You must be.
And which is what I love about natural gas, and what I dislike about natural gas. It's volatile, and it's $100 per point, and that's what I love about it. And what I dislike about it is it's volatile and it's up or down $100 per point. Also, it's kind of like a love-hate relationship with it, but. You can trade it with a 3 or 4 point stop, though. Because I've been watching this over the last few days, even as volatile as it is, it's certainly tradable with 3 points, and that's equivalent to like 30 pips in the euro. So, it's a very good trading vehicle for people that want to watch it. It's very interesting, and it's a very, very big contract, so you have to watch it. But you're right that. 10:30 on Thursday is equivalent to the Federal Reserve acting, so you've got to be real careful at that time. Oh, I disagree with that. It's like the Federal Reserve acting, the ECB acting, the Bank of Japan.
All at the same time, much like we did with the move that we had on the on the 26th when we had the perfect storm for stocks. When the Nasdaq jumped 100, so. It's an outlier event, but it's still happening, and the market's still going higher, so it certainly hasn't gone down.
Can I ask you another question?
Sure, fire away, David. Go ahead.
On the S&P 5, it's completing several ABCD patterns, and to me, it's looking overbought here, and I shorted it. About
David,
9 o'clock
we have to take it. We got to pay a few bills here, David. Stay with us till after the break, and then we'll continue our conversation. Okay?
Thank you.
Okay, thanks, David. We'll be right back, folks, after these few minutes.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization
execution capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we are opening the market here. Looks like we're still up on the day, but very slightly. We've been in a run here in stocks for quite some time. How much it's going to continue, we'll have to wait and see. Now, one of the things that we're looking at yesterday were the bonds and also the Treasury notes. It looks like they're going to go down to the 786. The number on the bonds would be 155.09. We're trading a point higher than that right now, so we want to keep an eye on that. Now, last night, our crude oil went down to David. David, are you there?
Yes,
I'm
sir.
sorry. You know, I had to run. We're having a storm here, one of these fall storms that we get after the monsoons, and it's really making a big impact. And so I had to, reboot something, and I forgot that you were on the line. So fire away. We were talking about the S&P You were looking at that. Yeah, go ahead.
Well, unfortunately, I've had to step away from the screen, but it looks to me, at least, I shorted the S&P last night and on the 9 o'clock hour because it completed several ABCDs, and it also looked like a 3-drive to a top. And I was just wondering if you were seeing the same thing I was seeing, and it seemed like a fairly reasonably low risk, good risk reward scenario. But the flip side to it is this thing's kind of been melting up for several days now.
No question about it. But at the time you were looking at it, I was watching that. It happened to be 2 in the morning our time, and we were in the midst of a storm, and it was raining so hard that the skylights on the house were like drums, and so it was quite loud. So I was watching it, and then I was watching the Nasdaq because it made new highs. It made new contract highs on the futures by just a little bit. Not sold off a tiny bit from this area, but it shouldn't go back above that the 2095 level. And I would certainly protect your profits here because this market has been extremely strong. And the Bradley date that I was looking at for the 28th, and now we're 2 days into that. The market, it literally Monday is going to be the telltale tale, because if we close strong today again, it's going to be really interesting. What surprised me the most, David, when we're talking about the S&P with those big stocks that I've been watching, Google, Microsoft, Amazon, and some of the others, they haven't really violated any of these things. So we're going to find out, what happens here with them. But we'll watch it, I guess.
Yeah, no doubt. It's if it keeps going, it looks like it probably might make a 100% move for a move and retest the 2134 on the cash if it keeps doing this melt up deal. But we'll see. I mean, typically, November 10 and December tend to be bullish months, but it'll be interesting to see how this plays out, considering the tremendous run up we've had in October. So it's kind of, I don't know. I guess we shall see. Are you in Scottsdale today, or what's
no? We're in Tucson today. So that's where we are now. One other thing we should talk about, David, is I watch the New York Stock Exchange Index because I think that's the broad market,
yes, sir.
And we are within a heartbeat of we might make it this morning with a higher opening of the 61% retracement on this New York Stock Exchange Index from the high back on May 19th. So that's something that I'm watching today. If we close above that, which we certainly can, this is going to, most of these indices that I watch have already invalidated the patterns that I was looking at. The Nasdaq made new highs. The S&P hasn't done it yet, and the Nasdaq, or the New York Stock Exchange Index, hasn't done it yet, and nor has the Russell Small Cap. But they're not very far away from total breakouts. And if that's the case, boy, that means I missed that bottom on August the 24th, and I can understand why the bottom came in, but I didn't think it was going to be straight up, and I didn't think we would see a 10% move in the S&P in 1 month. The number of times that's happened in history you can count on one hand, and that doesn't mean it's not going to be up another 10%, in November too. But that's what we're looking at early this morning, anyway.
I feel your pain, my friend, because I was looking at the S&P
I didn't have a lot of that.
I was looking at it on September 29th, and I'm thinking to myself, all right, this is a classic trade what you see, right? I'm looking at it, I'm like, this tells me to go long, and I was like, oh, it can't be. It's going to go down further. This thing's going to fail. It's going to drop, and I didn't do it. And I was like, oh, just kick myself big time.
I can understand that. What the most frustrating part is not being long, because I have a service for TFNN 24/7, and I've been short Nike for several weeks, and that's one of the high-priced Dow stocks, and that's never gone to much of a loss. In fact, we had a profit most of those days, and so all I decided to do was to say, well, we'll just put the stop at break even and let it rip, because it'll either work or it won't. But the fact that it hasn't made new highs in 2 weeks, totally shocked me when everything else did. But these other stocks still have not violated those bigger patterns, but they certainly could today without any trouble. Just be really careful with this, because as you know, the trend has been, very, very strong. And should it ever get below 1151, in the, or excuse me, 2051 in the S&P, then you know you got it. Then you know you've got the move on, because that's after the Fed stuff, and you're pretty much ready to to go lower, would be my guess.
Gotcha. Okay. Well, Larry, I certainly appreciate you taking my call, and take care.
I love talking to you, and I sure love Clearwater. If you go by Cleveland Street, wave up at Mr. O'Brien and Company today, okay?
Oh yeah, no, I can walk. I'm blocks away from the SunTrust building that he's in. But yeah, no, it's my friend. It is beautiful. We're entering that fall time, and it's clear blue skies, and it's just absolutely beautiful in Florida right now.
Yeah, and it's sweet 618. I always did like that one.
Yeah, oh yeah, no doubt about it. Absolutely. Well, listen, Larry, once again, thank you so much for taking my call, my friend. Have a great weekend.
Thank you, David. Okay, folks, we're going to take a look here at a couple of things that we wanted to look at. First of all, we mentioned we have a question about Apple, and I'll bring the Apple chart up to take a look at this, because it's most of the people that have bought this all year long are still underwater. There's only a few people that bought it down there in August, but we are not too far. We broke out above the 61% retracement, above that 117 level. The only other resistance we have is up at the 786, up at 124. And, I'm not sure whether even that's going to hold. If the market is just doing what it wants to do, that's all I can tell you. These patterns that I've looked at, they keep you in the game most of the time, but sometimes they don't work. And that's the bottom line. And when they don't, you've just got to, stand aside and wait to see, what the next pattern is going to be. They've worked beautifully in gold and silver and bonds, and especially the euro. The euro's been incredible, and also the Canadian dollar has always been, has been extremely good. But the stock market trying to find what it's doing, and the problem that I've had, folks, is that I use this New York Stock Exchange Index, because that is what the true stock market is. And that's saying it's such a different picture than what we're looking at with the NASDAQ and some of the other things. And I know the NASDAQ is, heavily weighted with these big high-tech stocks. But, with the big run we've had in NASDAQ, since the perfect storm on the 26th, none of those other stocks like Google, Amazon, and Microsoft have made new highs. I mean, the high was still made on the 26th. So Apple and friends moved the market up the last day or two. So that's what I'm looking at. These patterns are pretty good. Now I wanted to show you one stock that we've been looking at for quite some time that is under a great deal of pressure, and that is Deutsche Bank. And this is the largest bank in Germany, and that makes it the largest bank in Europe. I believe it is. And you can see that they're having more bad news, and it's gapped down dramatically again. And they've had some fines levied against them. So all of that is telling them that there's probably other problems coming into the market. But the trend is certainly down, and it looks like we've got lower levels. Now, I'm sure that Europe is going to have their own too big to fail program. I mean, that's pretty much regular business over there, and I know they're going to take it from what we're looking at, and we'll see what really happens with that. Volkswagen is still under some pressure, and they probably will be for some time until they turn their truth in engineering slogan around, and we'll see what really is looking around. Now, one of the commentators today on Bloomberg, because we had this storm, I was watching a little bit of the TV this morning on Bloomberg, and we had a specialist on China, and he was saying that China is even more bullish than people believe, is because of the fact that now they have the two-child policy. In fact, they have. I think they basically have taken off. I think they can have as many children as they want now, but I'm not sure. So we'll wait and see. If you remember back in 1974, there was mandatory sterilization over there, and that's what caused their population to not increase dramatically like it has. And now they're saying they need more people, so we'll see long term. But remember, it takes a long time in the gestation period on these things, so I don't think it's going to affect the GDP for a few months. That would still be my guess. The banking index is another one that has looked pretty interesting. We should be completing the ABCD pattern right at the 61% retracement here in the banking index, somewhere around 75 and change today. That's basically your Goldman Sachs, JP Morgan, Morgan Stanley, that group. And so we'll see if that's still in a bear market. That's making a Gartley pattern in a bear market. But again, some of these have just shot through there, without any trouble at all. One particular one that we would be looking at is Disney. And well, that's amazing. I had hit that right on the head here. Someone just asked Disney, and I was pulling up the chart as that happened. And we have a Gartley forming in Disney right up here at this 115.20 level. I don't know where Disney's trading at this morning, but it's right in this ballpark where the ABCD is completing. And well, you might, if you're in this, probably the best thing to do would be to wait for the close, because you have some real strong statistics today, folks, against being short this market. And that is, you have an up month, and it's the last day of the month. And that is a very, very positive thing. If you remember, the last 2 days of the month and the first 2 days of the month are the most positive days for the market. That's basically what we're looking at. So New York Stock Exchange Index actually opened down a little bit today. So we'll see what the rest of these things are doing, and we'll see what's going on. So Disney is up a penny, so it's into that ballpark where it most probably is a sale, and we'll keep a close eye on that, and also keep a really close eye on this gold, folks, and also silver. Because silver, let me bring this, I put the silver chart up again. I wanted to show you, silver got down to the 1550 level, and that's a very, very important level, because that's the 382 retracement of the high that we made, back when we made the 61% retracement up at 1635. And should we ever get above 1635, boy, you don't want to be short silver, because that thing could really go. And right now, it's at major support, as is gold, down at the 1439 level. The low today has been 1440. That low could be 1439, 1438, which is the exact 61% retracement. But those are the ones that you want to be watching, the most closely, for today. Now, this is a Friday, of course, and, there will be a lot of, things happening like there always happens to be. But the real action, if there is any, will most probably, come in, on Monday, because people will, be looking at their monthly statements and seeing that they made 10% on the month, and there might be 1 or 2 days of profit taking. Realize we've only been down in the last 22 trading days in the stocks. We've only been down 4 of those 22 days, and on one of those days we were only down early in the morning, and then we turned around and went higher. Now, someone's asked a question about why investors are shorting the Canadian housing. I don't know absolutely anything about that. I'll have to ask the boss, because she's from Canada and she follows the housing market, much better than I am. So we'll see what's going on. Gold and silver are both in downtrend. There's no question about that. We had that ABCD up there at 1192. It didn't go any higher, so it's certainly in a downtrend. Okay, now what we're going to do now is take a little break. We'll be back to wrap things up.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, by the way, I was supposed to have our good friend Norm Winsky from Astro Trends on, and I spoke with him, and he said he would rather come on when he saw some type of an indication in a top in the stock market. And so I've penciled him in for August the 16th of 2018. So we'll be talking to Norman in about 2.5 years. We've enjoyed having him on as much as we have, but we'll have to wait and see the next time we hear from him. By the way, folks, I put that last part in. We'll have him on again because he helps us out with a lot of other things just besides some of the things that we talk about the market. He's done very well in gold and a few other things, but I enjoy the Astro part of this quite a bit. We do have this Bradley thing, but it's this is the last day. I mean, 28th, it could be off by 2 days, but not much more than that. The other one that we want to mention in the last chart that I've looked at here is this New York Stock Exchange Index chart. This has served us pretty well. If you remember when the market was making new highs in the NASDAQ, And in the S&P and also the Dow Jones, the New York Stock Exchange Index was not doing that. That was back on May the 19th when we had Mercury retrograde and the new moon. And so we have a situation now where we're making a 61% retracement. Back in the New York Stock Exchange Index, we're only less than 0.5% away from that. And yet we've made new highs in the NASDAQ, which is primarily because of your Amazon, Google and Microsoft and Facebook. And but the others have not followed through as of yet. The SOX index is still it turned down yesterday, so that's still in a downtrend. IWM, even though it's rallying strongly yesterday, is still in a downtrend. And we'll just wait to see what happens. Just don't get too overly bullish up in this area, folks. With these huge gaps that we have in these big stocks, they will be filled. Amazon, McDonald's, Google. These gaps will be filled eventually. Maybe not in my lifetime, but we'll see. We'll see what happens the last times that we see this going on. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.